Good morning. It's Friday the 13th. I don't know what that means, but you know, it is Friday the 13th. Markets will open in approximately 2 minutes. I'm trying to connect to Telegram. Don't know why Telegram won't connect at the moment. Right, I'm gonna have to give up on that. Okay, so here we go. Where are my manners? Good morning, everybody. I hope you're well. I hope that yesterday was a good trading day for you. Let's see what today brings. I'm gonna swap over to the 5-minute chart. This is the FTSE. And the markets are open. Okay. I'm gonna take my face off here for a little while, and so we just see the charts. Okay. I'll see you in a bit. DAX closed yesterday at 18,518. So we have a gap up situation. The FTSE closed at 8218. So that 2 is a gap up. Now I'm waiting for the first 5-minute bar to materialize, and then maybe I'll have something for you. I'm going to swap over to the DAX. just show you the price action during the night. Just a little bit more data. This is where the DAX closed yesterday, here, and then the US market rallied, closed, and we've been trading sideways. There's a range here to here, and the DAX has cleared that range, taking out the low end of the range, and we're very much sort of just in a trading range, and I imagine you need to expect a trading range today. I don't know what your protocol is, but I like to look at what news are coming out. And today, there's on this Friday the 13th of September, there are no red letter days. Sorry, red, not red letter, red flag. Red letter is something different, isn't it? Okay, so we have a positive bar on both the DAX and the FTSE this morning as its first 5-minute bar. The FTSE has just tested the 30-minute range. And scalpers are coming in, and short-term set or resistance traders have come in and sell short here. I'll show you the 30-minute chart in the DAX. So no news, just sentiment. So this is sort of where you just settle into a routine. Trading is very much about just doing the same thing over and over. And then occasionally you get these highly volatile environments, which are fun to trade, especially when you get it right. But eventually things settle down again and you just get into the routine of it. So it looks very much like we're going to have a routine Friday. So I'll tell you, just at times I will sit here and scalp a bit for myself. So I'll tell you about a trade I just did. I sold short the FTSE here. I sold it about 53.6. It went as high as 54. Then it went down to 49. At that point, I had a stop loss up. I had about 8 points. And then I moved my stop loss. So I was just risking 3 points. And then this happened. And so me personally, I am down 3 points. I think it was. Let me just check here. Yeah. No. Yes, 3 points. But to me, the small losses, they really don't bother me. It's when you take these big old whopping losses, they can be really difficult for the psyche to handle. But sort of just getting into the habit of, all right, little loss. And of course, what you're hoping for is that the market will actually begin to make a real move, and then you have the opportunity to add to it, and you've already established a little base, a base position. But I don't want to get into the habit of announcing these short-term trades. I'd rather just stick to, right, I got my mechanical, aggressive school run, rule of 4, first part positive, first part negative, brunch, that kind of stuff. So far, I got nothing yet. We are on the third 5-minute candle. So if you ask me, oh, but does it not bother you to lose 3 points when you are up 4 points? No, it's just, yes, sort of, that's just the rhythm you get into. You're like, you win a bit, you lose a bit, you win a bit, lose a bit. And then all of a sudden, you get something that is really worth holding on to. If you go to my website, TraderTom.com, and you go to resources, in there's a book called Phantom of the Pit. Now there's 2 versions to them. There's the original version, and then there's the version that I haven't written it, but I have taken the essence of the big book and put it in together into a much smaller book. It's called an abridged version. In there are 2 rules that I quite like to remind myself of. One is that you gotta assume you're wrong until the market proves you otherwise. And I know that there are traders who object to this because they want to approach trading from a positive mindset point of view. And I would normally endorse that perspective of having a positive mindset. But when it comes to an endeavor like trading, where the majority lose money, one might have to consider how normal thinking isn't the way forward. So if you go in with this rah rah, I can do this, this modern age, new age, positive mindset, you will perhaps struggle to accept that the game of trading is probably quite evenly distributed between winners and losers. And so what the writers and the authors of Phantom of the Pit are saying, which they are pit traders themselves, Art Simpson and I think it's George Lane, what they're really arguing is that assuming until the market really proves otherwise. And so, be quick to take losses, but be slow to take profit. In wisdom, obviously, but wisdom that one has to practice. And me taking a loss like that, I go, all right. But where my mind quite likes to go is it likes to say, yeah, but you just lost £900. Imagine all the things you can buy for £900. I mean, you can buy this and you can do this. And that's where all of us will have two minds, and we have our subconscious, spontaneous thought patterns that will just, like if someone cuts you up in traffic or someone does something that creates an imbalance in your sense of justice. And it's an inherent feature in mankind that we want the world to be just. And so if someone does that, we have this response mechanism going, that's not fair. How dare you cut me up, and how dare you tell me to calm down. I'll calm down when I want to calm down, and so forth. But then you have the conscious thinking mind, and that's really what we have to develop as traders, is that ability to override our impulsive mindset, because the impulsive brain is a really bad trader. The impulsive brain is the one that wants to chase the market, and right now will be upset that we aren't long the DAX. And if you have a losing position, the impulsive mind is the one that says, just hold on to it, it'll probably come good, or double up on your losing position. And so what we need to create in order to create a successful business in trading is, first of all, curtail the impulsiveness of this impulsive mind, so that we don't just click on anything that moves. And at the same time, having features that can override the impulsive thought that will, without a doubt, emerge whenever you are engaged in something like trading. coming up to the top of the range in the DAX. Just want to see what the daily bar is looking like. You can see how volatility is dying down. We had a big few days in early September, but then yesterday was a lot calmer than the day before, and I judged that by the width of the candle. Also, so I shorted the FTSE at 53, call it 54, and market went 50. Great, moved the stop loss down, not to break even. Market moved back up again, stopped me out. But your mind 10 minutes later might remind you, if you hadn't stopped yourself out there, or you hadn't had a stop loss, that position would be back in profit now. That's at least one of the favorite tricks of my mind. You say things like that. So I'm waiting for school run. I know I could have taken an aggressive school run. But I'll stick to school run today. It's a lot of fresh air up here. So now, once again, I have a problem because the current 15-minute bar requires a stop loss in the DAX of 70 points plus the offset. And at this point, I'm not going to risk 70 points. So it's the same problem that I had. I can't remember if it was yesterday or the day before. But the market is in a strong wave of momentum. But I don't want to chase that momentum because I need to have a stop loss of practically 90 points. It's a shame, but that is the reality of it. So that was the completion of the second 15-minute candle. The low was 573, the high was 662, so that's a movement of 91 points. At the offset, that would require a 100-point stop loss in the DAX. I don't want to do that. I don't want to be a buyer here with a stop loss all the way down here. I'm just going to write that in Telegram. I'm just going to take a short break. Sorry about that. Thank you. Sorry for the delay. Seems to be dancing around in a range. FTSE. I'd like to show you the FTSE 30-minute chart because it would be the one that I would sell short below 8241. But it's at 50 at the moment. DAX looks strong. There's an 89-point range on the second 15-minute candle. You know, the whole philosophy behind the school run is that there's people working in the markets that will receive orders and they want to get orders done. And so the reason why I came about with a school run strategy, it's got nothing to do with school run. It was just something I called it because it's that time of the morning where men and women take their children to school, at least in Europe, is that used to be the inflection point where those who needed work done had done it. So it could very well be that I will bracket the third one here and I will take a long above 66 and a short below 32. Because now I got a much, much more palatable stop loss. Yeah, I have a stop loss of just 30 points. Maybe a little bit more, but not 100 points. But I haven't decided yet. I'm also, and this is going to sound as if I'm not fully centered, but I'm also mindful of it being Friday, and I'm mindful that while I want to take risk, even on Fridays, I don't want to take bets that I might not be able to recover from until next week. So that's why I don't want to risk 100 points. in the DAX. Just a quick flip over to the FTSE. This is the 30-minute chart, and here's the 5-minute chart. And the 5-minute chart, well, could suggest a short below 41. So now the DAX is gone below the low. Of the third 15-minute candle. I'm undecided. Hang on, I just got to deal with something. It will take 10 seconds. Just keep an eye on the FTSE. What's preventing me from selling short the DAX is I'm not quite aligned with throwing my money after a signal that I haven't thoroughly tested in a market that is up 100 and so points. I'd rather be long the DAX than be short. The FTSE, however, is beginning to look interesting. Because the first bar of the morning was a positive one. That's the one you're seeing over here. This one here. And it's generally not good for the FTSE if it's been up and then trades back down. That is what it looks like it's going to happen. So stand by. I would want to be a seller at 40, so I'll input an order. I'm short the FTSE. I've sold short down here, and I have a stop loss here. I should technically have a stop loss all the way up here, but I'm not going to do that. You'll probably notice that it has only just barely touched 40, but with a bid-ask spread, I was filled. I used a 1 point offset. If the FTSE doesn't go any lower than it is and goes back up again, I think I'll look back on this chart going, oh, it didn't really show weakness below the opening low, did it? And that would be a little bit of a problem. If it had gone down to 39, 38, 37, then I was quite vindicated and like I needed to be short. But if this was the best that I got, I would probably consider my loss sooner than my stop loss indicates. Where's 39? Just checking on the DAX as well. I'm moving my stop loss to 47. And I'll explain to you why. If you look at the 5-minute chart, you see this bar here. This is the one that just broke below, and it is the lowest bar that I can count for the last 7, 8 bars. 1, 2, 3, 4, 5, 6, 7, or even more so. But if the high of this bar here is taken out, then my weakness theorem is going to be proven incorrect. And so I'm going to give it about 3 points, but the high of this breakdown candle is 8243.4. And I am placing my new stop loss about 3.5 points above it at 47. So yeah, I'm cutting my risk by approximately 11 points. Obviously, the odds of being stopped out are now much bigger, but the loss will be significantly smaller. That has nothing to do with my earlier trade where I lost 3 points. It's just a reflection of how I read price action. Of course, it's a chance you take, and that's forever the equation that we as traders are subject to. Is the bigger stop loss, the smaller the risk of being stopped out, but the bigger the loss we do get when we are stopped out. Or lots of small little losses frequently, but they are, as I said, smaller. Small stop loss, stopped out a lot, not a lot of damage to your account. Big stop loss, depending on your size, of course. The odds of being stopped out are small, but significant loss. I'm going to show you a slightly different perspective. If the FTSE was to give in, then I would go for, as my first target, perhaps fill the gap, which would be down in this area here. And then we're coming down here. But that's just, we can all draw lines and hypothesize. But we just got to play what is. We're coming up to a gap fill. So in a case like this, my first mission is to try and get the stop loss to break even, or even contemplate taking a profit. But for now, so what has happened now, which is of significance, is that the FTSE had a gap up open this morning, and that gap has now been filled. The DAX has also significantly come off the highs. And so that whole hypothesis of they got to get the work done in the first 30 minutes, it holds true. Now, not empirically holds true because nothing ever works all the time. But I tried to find something that would encapsulate the majority of the observations with the samples that with the data that I worked with. So I'm about 2 points in profit in the FTSE. make that 4. So there's the gap is filled now in the FTSE. I'll show you. So we are about 7 points in profit. Excuse me. Oh, gee, believe. Sheesh kebab. Whew, sorry. That came very sudden. Okay, so we're doing better now. Just looking over here in the DAX, will I sell short on the school run short? Well, it's the same problem that I had before. So right now I'll just focus my energy on the DAX, on the FTSE. We're moving stop loss to break even. Just looking at a 30-minute chart. Ladies and gentlemen, I think I'm going to take profit here. Taking profit around 31. You know, it's not a big trade, not really. It's a couple of £1,000, but I liked it because it was well managed. Someone has sent me a message, and I'm just going to read it. He says, fun fact, according to CNBC, FTSE closed yesterday at 8240, exactly where we are short. Well, so actually, I was wrong. I had the close pegged at 8235. But I guess you have to factor in the auction. It says here, yeah, well, you know what? Actually, it says 8236. So with a little bit of adjustment into the auction. Yeah. Well, anyway, Wanderer, thank you, man. Yeah. Sorry, yeah. Also, Andy is pointing out the same thing. Sorry, ladies and gentlemen, I got it wrong. I thought the close was 8235. So we actually shorted the FTSE right at the gap fill. I stand corrected, and I apologize. Still, we made money. So, let's look at this DAX now. I suppose what I could do is to take the short at 818,570, but in a smaller trading size. Now, Andy, that now you got CNBC up and running, could you just send me what does the CNBC say about the DAX now? Okay. So, by my calculation, the DAX closed at 18,518 yesterday. So I think I did get that right. Thank you. Many thanks, all of you. All right. What I think I would do, ladies and gentlemen, I actually promised myself that I would trade with you for 2 hours this morning, just because I just wanted to be there with you, and it's always fun to trade with you. But it's rather slow. Sort of not slow. It's actually not slow at all. It's just that it just doesn't fit into the parameters whereby I execute trades. If I had different parameters, I'm sure it would be great, but I have a very specific set of parameters that I trade under that you already know. And so now I actually have to wait now for about 38 minutes before my next setup is really there. So I think I don't have enough dad jokes to entertain you for 38 minutes. I just don't. I mean, that was my best material you saw in that video this morning. And that wasn't even mine. I stole that from someone called Peter. So Peter, a nod to you. Thank you very much for sending me that joke. It was good. So I think I'll stop trading with you and I'll swap over to Telegram. And if I get a setup in about 40 minutes, I will alert you there. Okay? And then otherwise I'll see you for the US session in about 5 hours. I hope you enjoyed today. I certainly enjoyed this FTSE position, which I am not sure I should have won on or not, but hey, I'll take that victory. So it is about 9 points profit for me, which is still 9 times 300. That's nice. So you can make a decent living from that, can't you? Okay. Thank you very much. I will hopefully see you later. Look after yourself and yeah, stay strong, right? All right, bye-bye.